Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in financial filings, and today we're diving deep into Golub Capital BDC 4 Inc.'s latest 10. K-Report this filing is packed with numbers that tell a story not just about the company's finances, but also about the market they operate in and the risks they're navigating. Let's jump right into the heart of it and see what is really going on. Before we dive in, make sure to hit that subscribe button and check out our Discord community linked in the description below for more exclusive content and discussions. Alright, let's talk numbers. First up, their consolidated statements of financial condition. This gives us a snapshot of where the company stands as of the 30th of September 2025 compared to 2024. The most striking figure here is their investments. The company's investments at fair value jumped from about $1.3 billion in 2024 to over $2.2 billion in 2025. That is a massive increase of nearly $900 million, or about 70%. This shows a huge expansion in their investment portfolio, which is the core of a business development company's operations. This tells us they are actively deploying capital into new deals. Their total assets followed suit, growing from about $1.37 billion to over $2.3 billion. This growth is directly tied to their investment activities. Now let's look at the flip side. Their liabilities debt is a huge part of their funding strategy. It went from about $692 million in 2024 to nearly $1.2 billion in 2025. This is a significant increase of over $700 million, or around 70%. The company is clearly using leverage to amplify its investments. This also means their interest expenses are going to be substantial. Total liabilities more than doubled from $717 million to over $1.2 billion. This really highlights their increased reliance on debt to fund their expansion. On the equity side, common stock outstanding shares also grew significantly from about 43 million to over 71 million shares. That is an increase of nearly 30 million shares, which shows they've been raising capital from investors. They also managed to keep their net asset value per share very consistent at $15 year over year. This is important because as a BDC, they have to be careful about issuing stock below net asset value. Now let's look at how this played out in their operations. Their consolidated statements of operations for the years ending the 30th of September 2025 and 2024 show dramatic growth. Total investment income nearly doubled, going from about $103 million in 2024 to $177 million in 2025. This is a huge jump of over $73 million, or about 71%, and it is driven by that larger investment portfolio as we saw earlier. Their net investment income before taxes also saw a massive increase from about $54 million in 2024 to almost $89 million in 2025. This is a 64% increase, translating to an extra $34 million. This is the profit generated from their core lending activities after paying for most of their expenses. The realized gains and losses are relatively small here at only about $263,000 for 2025. This suggests the company isn't actively trading in and out of investments for short term gains, rather they hold onto their investments for the long term. Unrealized appreciation is where things get interesting. While the company's overall profit grew significantly, their unrealized gains actually decreased from about $14 million in 2024 to about $4.8 million in 2025. This means that while their income is up, the fair value of some of their existing investments either grew slower or even decreased. Compared to the previous year, this might be due to market fluctuations or specific company performances within their portfolio. Looking at their portfolio composition, it is clear they are heavily focused on one-stop loans, making up about 93% of their investments as of September 2025. This aligns with their strategy of providing comprehensive loan solutions to middle market companies. This concentration means their fortunes are closely tied to the success of these specific types of loans. And what about those expenses? Their interest and facility fees really shot up from about $36 million in 2024 to over $60 million in 2025. This is a direct consequence of that huge increase in debt we saw earlier. It is the price they pay for using leverage. The base management fee paid to GC advisors also followed suit, increasing significantly. But remember, a portion of this is waived, so the actual cost to the company is lower. And the incentive fee paid to GC advisors also grew substantially. This is directly tied to their investment performance and shows the advisors are getting rewarded for the company's income generation. Now onto liquidity and capital resources. As of September 2025, they had quite a bit of money committed to future investments at over $462 million. This means they've got more deals in the pipeline ready to be funded. Their asset coverage ratio is 188.5%. This is a crucial number for business development companies. It tells us how much asset value they have for every dollar of debt they owe. A ratio above 150% is generally required by law, meaning they are currently in compliance with those regulations. This is a key indicator of their financial stability under leverage. They have multiple credit facilities that are essential for their operations. The DB credit facility, for example, allowed them borrowing up to $300 million, and the BNP credit facility topped out at a massive $750 million. These credit lines provide significant flexibility to fund investments and manage cash flow. This clearly shows they are leveraging multiple financial institutions to support their lending operations. Let's look at the actual investments themselves. Their consolidated schedule of investments is quite extensive. This table shows their holdings by industry and company. As of September 2025, their largest exposure by industry is software, accounting for about 26.7%, or over $590 million of their total investments. This indicates a strong strategic focus on tech companies. Individually, Denali Intermediate Holdings represents their single largest investment at about $45 million. This level of concentration in a single company means that its performance has a significant impact on the overall company. Now for the crucial part, the risk factors, because every investment comes with risks here, is a summary of the key ones. They're in a super competitive market for investment opportunities. This means they might not always get the best deals or might have to accept less favorable terms, leading to lower returns or even losses. It is a tough game when everyone's chasing the same dollars. Their success hinges heavily on GC Advisors, their investment advisor. Basically, they are outsourcing their brainpower, and GC Advisors relies on Golub Capital's network. If GC Advisors or Golub Capital loses key people, or their relationships weaken, it directly impacts GBDC4's ability to find and make good investments. And of course, economic downturns are a major concern. If their portfolio companies struggle or default on loans, it directly hurts. GBDC4's own financial health. This is a classic risk for any lender, especially one focused on middle market companies, which can be more vulnerable to economic shocks. Overall, Golub Capital BDC4 Inc. is experiencing significant growth in its investment portfolio and net income. This is fueled by substantial debt leverage, which amplifies both potential gains and losses. Their heavy concentration in one-stop loans and software companies highlights their strategic focus, but also presents a concentrated risk if these sectors face headwinds, or if competition intensifies. Returns could suffer. Their reliance on GC advisors means that the advisor's performance, ability to maintain relationships and maintain access to deal flow are absolutely critical to the company's future. The consistent NAV per share is a positive sign that they are managing valuations well, but the increased debt load means they need to perform consistently to service that debt and satisfy their distribution requirements to remain a RIC. What is your take on Golub Capital BDC4 Inc. and its aggressive growth strategy? Share your thoughts in the comments below. And if you found this breakdown helpful, please hit that like button and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching. See you next time.